What is cost segregation, and how can it be used to give you a faster return on investment for your purchased or constructed building? Each building has value, and over time, that value lowers due to normal use and deterioration. A tax deduction called depreciation reflects this loss of value over time and allows a property owner to recover these costs of wear and tear. In the past, a building was treated as a single asset, and each of the internal components that made up the building were all calculated into one single asset value, which was depreciated over 39 years. This meant that over the term of 39 years, your tax deductions would remain exactly the same year to year. The problem with this approach is that it is not tax efficient. We all know well that most components within buildings don't last 39 years. Such components that don't last 39 years are carpeting, lighting, heating and cooling systems, landscaping, and land improvements. It is very tax inefficient to have to depreciate an asset over 39 years that will truly be disposed over a 5-year period or less. Treating the building in such a tax manner under the traditional depreciation method can be difficult to managing cash flow. However, a more favorable system exists that allows you to depreciate the individual assets within the building and accelerate your tax deduction plan much sooner, thus creating substantial wealth and cash preservation for the real estate investor. With cost segregation, an IRS-recognized and approved technique, the individual assets are expensed based on their individual depreciable lives, as opposed to being part of the building as a whole. Short-term asset segregation of building components that are non-structural in nature include fixtures, flooring, cabinetry, internal piping, landscape, parking lots, land improvements, mechanical systems, lighting systems, special electrical work, and building finishes. When you segregate these assets from the structural portions of the building, cost segregation can become a powerful tax planning tool for maximizing tax deductions that lead to great wealth preservation through the management of your investment in the most tax-efficient manner. With cost segregation in this example, the investors of the building will have accelerated tax deductions of over $1.2 million a year for the first 5 years. Without this study, the same investors would only be able to take $385,000 in tax deductions. This equates to $815,000 in additional tax deductions, and at a combined federal and state tax rate of 50%, the wealth preservation is $407,500. A cost segregation engineering tax study provides additional tax benefits annually by allowing you to expense repairs, maintenance, and/or dispositions as you improve your building. Additional benefits from a cost segregation study can come from insurance savings, energy cost savings, and property tax savings. Would you like to know how cost segregation can benefit you? Visit engineeredtaxservices.com to learn more.